Hello traders, the title of the video is Breakout Trading Strategies Combining Breakout Trading and Fibonacci Extension. Alright, so this is a breakout trading strategy that uses the Fibonacci extension. Alright, so if you have been watching our video for some time, probably you will notice that I have touch on some of the things that I'm about to discuss today, but what I'm trying to do here is to expand a bit more on those things that I have already touched on. All right, so I will expand on a specific Fibonacci extension, combining it with the breakout trading, because when it comes to breakout there are a lot of false breakouts. Traders sometimes get into a trade after a breakout and they get into trouble. So in fact we can title the video how to avoid a breakout trading mistakes. All right, but in order to avoid those breakout trading mistakes, we need to use Fibonacci extension, and I will show you here. As you will notice as I'm talking now, you may probably notice that I touched on those a point before, but I will expand on it, sharing with traders how to handle those breakouts like professional traders. I will keep this video also very short. All right, and so stay with us please. All right, under 9 minutes. So you can see on this chart that we have a breakout now for this stock. It's called a FLAC Incorporated. Is that the correct pronunciation? All right, so here it is. So we have that resistance. There was a trending first before. That's the top of the trending first, and then we have a sharp correction. So now we have a bullish breakout above that resistance level. All right, it's a bullish breakout. How do we know? Because the price breaks above that key resistance level at the $68 zone. All right, he breaks above it. That's what the price is doing all the time, and he retested here. All right, traders, breakout traders are trading this right now. So how do we avoid breakout trading mistakes using Fibonacci extension? That's what we are about to discuss today, because sometimes they get into trouble. All right. So as you can see here, usually what usually takes place after traders see the first candlestick bar. You see this one here. That's when people will highlight the high, the low, and the median. As I mentioned already in one of the tutorial when I was talking about the first candlestick bar, at a cycle point. All right. So I'm not going to talk about that. We move on. So usually people will try to buy. So we say that we can buy either near the median line of the first candlestick bar or above the high of that candlestick bar. You can see that as the price went above it a little bit, all right, there was some resistance there. And if you are not very careful, you will be the one paying the price, which means they will kick you out of the trade before the price will start going up. All right. So the best scenario is to break above, retest. Sometimes you may not see that. Sometimes we just run up. So how do we handle that? Using Fibonacci extension. What you need to do, you need to apply Fibonacci extension to the prior bullish move. So the price went up first from a prior high, and then it pulled back. All right, now is breaking above that resistance level. All right, what do you need to do? How do you handle it using Fibonacci extension level so that you do not get cooked? All right, that's what you want to do. So the trick that you can do, you need to apply Fibonacci extension to the prior bullish move. So from here to here, you apply Fibonacci extension to that, and you highlight the 138.2% Fibonacci extension level. Today we say, Joe, you already mentioned it. Okay, good. What I want to add today to expand on it, so now here it is, I apply Fibonacci extension to that bullish move, and now what I will do, practically speaking, I will draw my Fibonacci 138.2% Fibonacci extension level. That's there, because if the price breaks above the prior high, the next resistance level is 138.2% Fibonacci extension level. So we draw that line. The next thing that we want to draw, the next line that we want to draw is the median line between the 100% and the 138.2% Fibonacci retracement level. I already draw it on my chart. That's the median line between the 100% and the 138.2% Fibonacci retracement. That's the resistance level. Sometimes you'll see that the price found a resistance there. Another thing that I want to add to this so you can be aware of what is happening, you will also draw another median line between that median line and the 100% Fibonacci retracement level. Will you promise me? You don't have to promise me. Will you promise me, as of today, you will do those things to control your breakout trading? So usually you will see sometimes the first reaction, price breaks above, probably try to go to the median line between that first median line and the 100% level. I'm talking about the pink one here. You see, this is a good example here. So you stop at that median line, then you will pull back like this. You see, again, if find a bit of resistance again at that pink line, which is the median between the orange and the 100% Fibonacci retracement level. And then, if sometimes you'll pull back again to the pink line before going up to the 138.2% Fibonacci extension level. So, to improve your breakout trading or to know where to buy or sell, all right, those are the level you need to watch. So first thing first, apply the Fibonacci extension to the prior bullish move or to the prior bullish trend, highlight the 138.2% level. First thing, good. Second thing, draw the median line between the 138.2% Fibonacci extension and the 100% level. Good, that's the orange line there. Don't forget to draw another median line between that first median line and the 100% Fibonacci extension level, and monitor the reaction of the price in those in the vicinity of those key level. That's all. You may also, if you are looking for trading setup, looking for chart pattern, candlestick pattern in the vicinity of one of those key levels. Once you see once you identify a trading setup, you can now implement a top-down trading method to trade it. We can apply this strategy also in a downtrend. Price goes down from point A to point B. All right, and it breaks it finally break below that low. Okay, we are talking about bearish breakout. All right. Again, you will do exactly the same thing. You apply Fibonacci extension to the prior bearish trend. You highlight the 138.2% level. You draw the median line between the 100 and 138.2% level, and also between that median line and the 100% Fibonacci extension level. And you want to monitor the reaction of the price in that zone. Sometime, ladies and gentlemen, we want to keep this video very short. I want to highlight one point: is that sometimes what is happening is that a breakout may occur. All right, it's a clear-cut breakout, but it will fail. And very often it can fail at that pink line, which is the median line between the first median line and the 100% level. Okay, so quickly you are entering the trade here. All right, now they take you out and the price start going down more. All right, so be aware of those key levels, or the price may come up to this point. All right, and you want to join them only to see that they push it back down. So draw those lines. Okay, and combine the Fibonacci extension with your breakout trading. Okay, draw also the trend line. So apart from the horizontal line, okay, you will now draw trend lines. Okay, and see the intersection between. You see here, this trend line that I draw. You see here, you see the intersection between that trend line and this one. This one we are talking about the hot spot trading zone. You see here, draw the trend line. You see that's a hot spot trading zone. Okay. All right, this is a hot spot trading zone, intersection between the blue trend line and the pink line, and one more hot spot trading zone. That's where we are now. This one here. So don't forget to draw as many trend lines and watch the reaction of the price between the intersection of those key level and those trend line. All right. When we want to keep it short, and we conclude this discussion today about breakout trading strategy, combining breakout trading and Fibonacci extensions. All right. If you have any question or suggestion, put in the comment section. And of course, I will be recording another video to answer your specific question. If you find this video useful, please let us know by giving us the thumbs up. If you think that this is another useless recording, give us the thumbs down. If you think this is an essential tutorial, feel free to share it with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about breakout trading, a strategy combining breakout trading and Fibonacci extension. Happy trading to you all and speak to you soon.